Trying to get that all. Oh.
Thank you very much, Blackbush, aka Dave Chappelle, for that intro of, yes, we're going to be talking about oil. Oil, that is. Absolutely love that bit. Love Dave Chappelle show. Anyways, that being said, let's go ahead and we're going to be looking at some stocks. Of course, if you've kind of been sleeping for quite a while or you're in a coma, God forbid, you're just waking up of like oil has literally crashed from very high prices all the way down, of course, due to the huge economic slowdown. Again, all due to the virus and everyone just panicking, and we've had multiple of leg ups and leg downs, mostly just legs down for the overall market. But once we kind of just like jump into kind of look at the charts, jumping into some of the more positive economic data, even though the jobs report was a little bit lower and actually worse than people thought. I think it looks like the overall market is really anticipating some kind of stimulus check or some kind of helping of the small business owners and just the overall the U.S. States on with combating the virus, and that really will help potentially propel the stock market even higher. So currently, that's what the market's really kind of dictating on. Like, hey, there might be some kind of stimulus check that's going to help rebalance and actually take us to some even higher prices. So there's going to be a little bit more of a bull push going up from there. But so let's go ahead and just kind of jump over here to the charts. The first chart we're going to be looking at is XOP. That's going to be the Spiders S&P oil and gas ETF, basically. As you can see here, this was trading before the pandemic around $97 to almost $100. Of course, ever since then, it has been on a, not even a gliding, just like on a steep cliff dive here and just kind of crashing down, hitting a bottom basically around 29.48. And it kind of got a little of a consolidation here, again, due to the overall rally that really just, again, with the market really putting all its fear in the market and just selling blindly and just continue just to not really care about prices and just thinking that everyone's just going to turn to dust and we're all just going to be living like cave folks again. But with this, looking at the chart here, we really hit that bottom here. This is a very key level. It's going to be a very exhausted levels here on the daily side. Of course, since then, we've kind of seen somewhat of a rally. Then we came up to exactly the 618 Fibonacci retracement, which is, again, around $71.78. That was kind of on the hindsight of like more of a, I wouldn't call it a bull trap, but it's more or less that people got a little too hyped up. If you remember the time frame, this is like end of May kind of time frames where people are like, oh, things are going to start opening up during the summertime because the virus doesn't spread in warm weather, whatever. And there was some more positive spin on things, but a lot of states were still in substantial shutdown. Things really didn't pick up very much, and we saw that huge FOMO run up with, again, this is oil and gas ETF. Again, this is not a Tesla stock. It gapped up on 2 days, hit that level, totally failed. It came right back down and just traded sideways again with the overall trend, and this was just kind of just grinding lower. Kind of stayed above, stayed around below around that $45. Of course, we had that coming in towards the last month. So again, it would be November. We had kind of some stronger pullback coming through with the 5 and 8 crossing through the 21 and continue to grind higher, actually breaking above the 200 EMA. I was slightly concerned about this because once we hit the 200 EMA previously, which is that teal line here, we got a very, very sharp pullback on selling. We kind of got a little bit of that, but that Fibonacci retracement of the 38.2 Fibonacci chart came in at $55.62, kind of creating somewhat of a floor of support. Not a substantial floor of support, but something that kind of give it some kind of substance to kind of pull back and maybe get a bounce higher, which exactly we saw coming to the close on Friday. It was up nearly 8 to 9%, closing out the day on a very high note. So again, if we go to a very small time frame of like 5 minutes, you can see it was just a continuous run higher into the close, closing at the high, basically the close of Friday. So a very, very, very bullish tone. That doesn't mean on Monday it can come off and just sell off. Anything can happen in the market. You have to be very, very ready for that. Again, that's going to be a huge wake-up call. It could people can change their mind just like that again, which we saw previously. But again, this thing looks like it has a little bit more substantial movement to go through. So the next key level they're going to be looking for is basically looking for around the 63.70 level to be potentially be test. Again, we talked about that initial support at 55.62, and then some more substantial support around $51 to $50. Of course, we're trading at exactly at 61 bucks. That's a nice little number there. Looking for potentially hitting that 63.70, even coming up to potentially testing that $71.78, because you saw this huge movement of just like oil stocks really flying. So if you look at some of the bigger ones, we're going to be looking at Occidental, which is OXY on the charts here. This again was trading around 47 bucks before the overall pandemic and got all the way down to $8.52. So this is again, it rallied on Friday. On Friday, it has rallied just 13.4% on one day. We're not talking about some kind of SPAC. We're not talking about some kind of Chinese EV company. We are talking about an oil and gas company, folks. Like, this is some of the more boring base kind of stuff. And this thing has just really came through and just rallied here. Previously here, so I'll just show you how we do the fibs here. We do from the swing high to the swing low here, which is around $8, which it is $8.52. This thing, I wouldn't call it a lagger, but it's not as far in front as you saw with the overall ETF. It is mimicking it because the chart looks somewhat the same, but this bottomed substantially shorter ago than the previous chart. With that movement, because again, they really they cut their dividend, and a lot of people own these particular oil and gas stuff because of the dividend, because it had a 79 cents dividend and then it went down to a penny. So that's a pretty substantial cut, because again, they had to conserve cost and really they didn't know on what kind of weather they're going to have to go through on these particular times of the pandemic. So breaking above that 1774 level, which is again that 200 EMA, this thing in the past never broke above the 200 EMA like we just looked at the previous chart. So this has substantially, I believe, in my opinion, could run up to 23 to even the $26 level in a very short period of time, with some support coming in around $15, and then some more support coming in around $12.23. But this looks like, again, if this trend can continue and we get some ongoing stimulus bills, overall economies opening back up and trade happening, which we saw very high numbers in trade, even though people really just was doing a bear dance on the overall trade and just the overall growth of business. It has been fairly strong. It was holding even through the pandemic, and now it's really just off to the races here for the bulls on these oil stocks. Again, initially looking for some support coming in, maybe some selling around that 23.44, because again, you're gonna have a lot of people back here. Again, this is around the May into June timeframe, where people were very bullish on the reopening of the economy. It didn't happen, and a lot of people got stuck at some very high evaluations of positions. So we could hit these levels again in 2250 to 2350-ish range. We could see some selling again. Not going to be seeing like a crash, but we could see some kind of bouncing around at that level, maybe kind of testing this level before we would potentially break higher. So that's going to be my conclusion on that. And another stock we're going to be looking at is at XOM, which again is Exxon Mobil. Really, again, these charts look exactly the same, honestly. We had that huge run up basically in that May-June timeframe. Again, this stock was at $71 before the pandemic, and actually bottomed more exactly when the overall ETF was bottoming. That's XOP is the spider ETF. Came up to that 618, just like the other charts. And this one has not tested its 200 EMA here. So that's around that 4360 level. The next Fibonacci retracement we're going to be looking for on this one is going to be around that 4587 level again. So again, this stock alone was kind of lagging behind, because again, it didn't run up like 13-14% like the other guys. This thing was only up 4%. So a little bit of a little confusion there in the sense of like, I'm not sure on the fundamentals of each of the companies, but Exxon, again, high dividend paying stock. It was still paying its dividend compared to the other one, Occidental, we were looking at. But that being said, potentially looking to run up to that 47.75 to 45.87 to potentially test those levels, and some longer dated targets around that $55 range. With that being said, some short dated support are going to be coming in around $40 and then around that 37.50 level for some downward support there. But again, yeah, anything with these oil stocks, these things can fluctuate. Again, they're going to be heavily tied to economic data. They're going to be heavily tied to trade, and then the overall markets opening back up. And of course, the overall plan of Congress and the U.S. government passing some kind of stimulus bill to really help the people in need, in the sense of the small business folks. Again, that's going to be a huge, huge move for the market again, which I don't think is completely priced in on a particular stimulus bill going forth. But that being said, thank you for coming by and stopping by for the channel. Please don't forget to like and subscribe if you like the content. And if you did it, hit that thumbs down. I think I know who you're talking to. But we have a live stream tonight at 9:15 or 9:20. I forget what time I just put a random thing on my calendar. And then we also have a fantastic Discord link down in the description, completely free. Check it out. A lot of great folks there. Again, guys, this is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.